Okay, this is the trade replay for 3rd of December. Finally, I would say a very necessary day because it gave me losses. The first time since I started the experiment that the day has closed in red for me, and I think that was very important. Funnily enough, this is not because the setups did not work, but as anticipated, I was trying to be over smart, probably, took the trades that were not exactly by the system and ended up obviously paying for it. This is also fine because that's the whole idea of this, that through small quantity experiments, I get all of that itchiness out and eventually realize what I need to do. Yeah. So the day, this is how the day was looking. Previous day high, overnight low, and previous day low. The market opened below the previous super trend level, but obviously between previous day high and previous day low, nothing of note. Eventually, at the beginning of the day, this was a bullish bar, so I was marking this as the day low to be broken. What was interesting, as this bar was getting created, that obviously it had gone to this high and then it got rejected pretty sharply, and the low came in after the high. So I was also tempted, as the real market construction was happening, to mark this as the day high because that high was getting rejected. um, Going forward, then the market gave a pretty strong bar below, but eventually it kind of closed within this range. Uh, Now, this, given that this is a bearish bar, then our thinking of this as the anticipatory day high is okay. But at this point of time, we also continue with this anticipation of this day low because obviously this was a bullish bar, so that's our system. Then the next bar opens, and again it kind of closes below this. This is an oversold bar. So at this point of time, our potential system would have been to sell below this, some points below this low. So the R of the day was $12. So the rounded up number would have become $1.50. So we would try to sell, let's say, $1.50 below this. But again, as we saw in the previous day, we see that there is the previous day low level right about here. And again, I don't want uh, the price to come till here and then kind of do some price action and move away from me. So my thinking at this point in time was to kind of take some points below this. So let's say about 1.5 point below this, and then place my short entry here, right? That's exactly what I also did in the system. I placed my short entry here, anticipating that okay, if there is a close whatever, then there is a large bar on the downside, then I will get probably my fill. None of that happened. The market kind of reversed from here, and at this point of time I also got my the new indicator plus. Now at this point of time, this is actually, while the bars are 5 minutes, is actually taking support on the 15-minute super trend. This was, for yesterday's purposes, completely an untested setup, because even the few back tests I have done this, how this pattern behaves with the 5 minute super trend. But again, being kind of over smart and over eager, what I did was I said that I will probably take an entry as it closes above the high, and I maybe probably did two ticks above this, so probably 50. Yeah, so this is exactly where I decided that I will place my long entry. Completely untested system, no view of how this behaves. But what I have realized as I trade the market is that I have itchiness to place orders because I completely am in a FOMO that the market will move without me. This is something that will have to be curbed, and I will have to ensure that the trade comes to me rather than I go after the trades. But that, yeah, it's easier said than done. But that's the psychology that I need to train for through this small size experiments. Nothing happened. There is a inside bar. Then the market moves up. I got my fill. At this point of time, the way that at least our approach is that once I get from this plus sign setup, if I get a fill, the idea is to then go for the size of this bar, right? This was my view that I should get to this. But at this point of time, I was thinking that this is actually will have to close above the day high as well. There has been some price movement. So again, what I thought that I will probably try and take just below this breakout level high, and maybe even one tick below this, and that should be my target. That was my thinking at this point in time. That's still good, whatever. At this point of time, good $3 on the upside. The market moves somewhat up, feeling okay about it. It also moves up. I lost, or was my stop wasn't triggered by probably yeah, about three ticks, and then the market came down, and my panic started. If I move this, then yeah, it again kind of stalled at the overnight low level, nothing happening, and then it broke below this. So this is the point where I exited the market with some loss. Now, from the setup perspective, what I realize is that this thinking was probably correct, that we should keep it below day low. But what I also could have thought of is that we should, rather than trying to take this full one, let's try to keep till the body, right? um, and this is something that I need to test out, that if let's say if this day high level was not there, or there was no other truncation to the target, then still some relevant body is where I should take my exits, rather than trying to take the full. Because again, like from a 2 3 tick perspective, I got the exit. But this is all good in hindsight. Uh, did not happen. Took the market in loss. Then at this point of time, because there had been a movement upwards, I moved the level that I need a low break to this one. No orders in the system because I had exited. Yeah. So again, I let the market move, and then now it comes down and closes below this, right? Yeah. So this is the big mistake that I did, now that I remember, right? This was the big mistake. So at this bar, when it kind of came down, I was thinking that okay, the market probably is moving sharply. It will break the day low, right? And then it will come down, and if it comes down sharply, then I should get a fill before the previous day low. But while that thinking was correct, that I should not take the entry here, I should take the entry here, I did not add the required buffer. So the learning from there is that the even if I have to take an anticipatory sell, right? That if what happens in the market, like there is a huge bar and it just goes through all the stocks because it just needs to cover everything, then still I need to add that buffer. Now, what my thinking was that rather than $1.50 buffer, which is the right amount, I probably had about a 50-cent buffer or something here, right? Which is our normal amount of buffer for entries and exit. That if it comes down and I will sell. So I had my system sell after the exit was somewhere here, right? Which obviously got filled. When it got filled, my thinking was that okay, this is probably the relevant swing high, so I will keep my close basis stop loss here, right? So let's remove this long entry because that's not anymore there, right? So this was my thinking, that I will do it. Then the market came above it and closed, moved sharply against me. Panic sets in. But obviously, I was trying to calm myself down to say that okay, my stop loss is here. Let's let the market move the way that it wants to move. Came down and then for a brief second came down my entry level and then again closed back up. Again moved down, closed back up, and then there was this huge reaction from the previous day low. Market started moving, and at this point of time, I was thinking that while this pattern was created, my close level stop loss would have been this. This has now closed. So what I did was I was not feeling confident. So I added some amount of buffer here and placed my stop loss here, thinking that if I'm wrong, then let me not be too wrong and let me just exit the market if it happens. It continued to consolidate around here, no particular movement, and at this bar, I got my exit. After this, obviously, I was of the view that probably I'm not able to read the market properly. Maybe better to just step away and not let me have another loss. So I had two continuous losses. So I stepped away from the screen and decided not to take any more trade through the day. Then the market moved. It somewhat came down, which was obviously, a big regret move for myself. Then again, it started consolidating near the previous day low, continued to inch higher, inch higher, inch higher. Later in the day, I got this particular setup again. So the way that we are going to trade it is, if we were trading, that we would say that okay, let us take a trade of with some buffer. Let us take a short entry here, okay, which is a touch base. Sorry, not touch base. SL actually short entry. And with that, we would have said our stop loss will be somewhere here. So we would have kept it here. We would have said this is our stop loss. And given that this length from here to here is about 5 points, then I said from this point, sorry, this point, we should take the $5. And this was not truncated by any previous day low or previous day high. It was definitely truncated with overnight low. So we would have said that probably our our risk to be taken out is maybe just at the overnight low. Like that's how the trade would work, because there is a some number which is probably truncating it, right? It continued, it again creates the bar, so we're still waiting, still waiting, still waiting, still waiting. Now at this point, without our entry getting triggered, we have a reversal in ST. Now the question that we need to answer through our backtest is that if there are continuous setups getting created as it is getting created here, do we continue to go for the better and better entry, or we stay at the first entry? We'll have to see. So any which way, so the setup kind of changed, and now we should not ideally take this trade at all, because the the trade works when it is in direction of the super trend. Now there is a flip. So at this flip, our system says to take the trade above this. So ideally we should have taken a trade one tick below with a stop loss one tick below the overnight high, and entry one tick above the this bar. We would have gotten our fill at this point in time. Then the market moved back, and like we said, so took some. So here is what that this trade would have still worked if we were taking irrespective of the change in super trend. So that again has to be checked through the back test. Market moves in our direction somewhat, we get an OB bar. So when we would have gotten an OB bar, ideally we would have said to take the exit somewhere here, which is the n minus one bar. But whatever, like wasn't in the trade at this point of time. Still, it would have been here only. Uh, Nothing happened. It's already 4:10. Okay, so a lot of time was spent. Okay, so this it came down, doing nothing. It went below this. We are doing nothing, and then yeah, it came down sharply against us. I would have again panicked and exited. But for all you know, actually the target was reached at a later point. Have no clue how I would have stayed with this. Needs nerves of steel to do this, because at this point of time I would have said that my stop loss is, let's say, this one. That's how scalping trades work. Probably give more latitude, but yeah, uh, truly no clue how I would have stayed. Probably if this was a live trade, I would have made losses only, even though it ended. It gave me a good exit, and that's the day. So apart from obviously the system mistake that I did, ended up making two losses. This was okay. It was probably chalked out to a trial trade. This was probably more system related mistake where I did not add buffer. One thing to note, which I'm observing from the last couple of days, is that if the market needs to trend, right, which is why we are taking these high-low breakout trades and so on, then there is limited pullback that happens. Okay, so for example, at this point, when we had the first bar that closed below our relevant level, there would not have been this pullback if it had to trend, which means that if we have to now take these breakout trades in situations where there has been a pullback before we can enter, that's why we are adding the buffer. We need to think whether the pullback is the right place to enter. Right now, what we have not defined properly is how do we think about the pullback, where exactly is the entry, because in this situation, even though there was a pullback, there was a retracement, but it did not close, and so on. So where is that pullback point? That's one. The second observation is that when there is a repeated reaction at some of these significant levels, like previous day low, previous day high, where for example it tried closing below this, there was a reaction, 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 then either the breakout is not going to work. That's very clear, because repeatedly there is buying coming from the previous day lows, or if it needs to work, it needs to work with obviously some large buffer so that we can provide at this point in time, even like a buffer of even a buffer of how much, let's say about $2 would have only worked, right? Even if it was $1.50, which is our defined buffer, we would have gotten our fill, not from this low, but I'm saying that if we're just trying to trade from this low. So that's the other bit, that anticipation will kill us because we don't have enough buffer, or there is just like a sharp liquidity sweep. and the market goes upward. So I need to get um, over the FOMO of a big red bar coming and then I losing like 7, 8 points and so on, and probably need to be more aware of this structure as we backtest. The other thing that I was also observing is that in at least this market, it's very rare for having three or more bars in one direction, right? So for example, this one, two, three, and then there was a reaction on the upside. If I see this one, two, three, four, five, then there was a reaction on the upside. And whenever this reaction on the upside happens, there is a tendency for the prices to kind of always go ahead and take, at least go till the body of this bar, right? So this sharp drive, which in this case was about, uh, if I take from top to bottom, it was about 11.5 points, almost equal to our R of the day. Again, if I see this one from top to bottom, it was exactly equal to R of the day. So whenever there is a one-sided movement towards the R of the day, then there is necessarily a reaction on the reverse side. So that could also be one of our guiding principles, that if there is something like this, then we'll have to wait for the pullback, or we can also start thinking of a scalp setup where after this movement, if there is some retracement, then we can take the high till the body high. But the rules for that system will need to be developed further. But that's again one of the observation, like we had this observation of this pinch from yesterday. So this is the observation. So all in all, yeah, I'm okay because the quantity was small. There was a loss making trade. I'm not feeling too sad about it. However, even after so much of like conversations and mental notes about not deviating from the system, I'm still doing that. So that's one thing to be thought through. Second thing, for as a reminder, is that I feel much more comfortable when even at even at theoretical prices, I have put the orders in the system, because I have seen that as the market opens, I have this huge FOMO of me missing out on a very strong move. But once I place some orders at some very far away points, so for example, at when the market was developing, I had placed my buy somewhere here, which was like unheard of prices at this point of time. I had placed my sells somewhere here. Then I was able to think more clearly because that initial itch was over. So that's the other uh, mental note, that probably for the mental piece, getting into the trade is not as important, but actually having placed the trade is still okay, because at least the mind feels that there is some action that they have taken, and then I'm able to read the price action more clearly. Otherwise, there's always this hurry to assess each bar whether that bar can be taken as an entry bar or not. So that's probably something that we need to think through, if that's the way that we can manage our mind. Okay, so that's the trade replay for today.